Hi, I'm Gorrie from the Navigator Network. Our firm is the current holder of the Australian Firm of the Year with Grant Abbott's Now Infinity Group. Today I'm going to discuss the 10 best ways for your business to minimise its tax bill. Australia has a very high direct taxes with a company tax rate of 30 cents in the dollar and the highest personal tax rate of 49%. With tax rates like this, it's important that you take all possible steps in order to minimise the tax that you and your business pay. The following is the list of the 10 best ways I know to minimise the tax this financial year. Number 1, superannuation. It's no coincidence that super starts at number 1 because it is probably the best way you will be able to reduce your tax, and hopefully you can then invest the superannuation and make your super grow. If you're under 50 years of age, you can contribute $30,000 into super each year, and if you are 50 years or older, you can contribute $35,000 into super each year. Additionally, keep in mind that depending on how you're structured, you may be able to hold on to your cash flow and make your super contribution just before 30th of June each year, as I do. Also, make sure that if you have staff, make sure you pay their June superannuation guarantee charge just before 30th of June each year, because superannuation is one deduction you can only claim as a tax deduction in the year that it is made. Number 2, depreciation. Every business needs to look at its assets at the 30th of June each year and decide what items should be scrapped or are obsolete. This may give a further tax deduction for that year. The best way to do this is to print off your list of plant and equipment from last year's tax return and make notes on the list about which items are to be scrapped, or bring that information into your meeting with your accountant at the end of the year. 3, purchasing new assets prior to 30th of June. If you are considering purchasing additional assets in the months just after 30th of June each year, consider bringing forward the purchase of those assets prior to 30th of June in order to start the depreciating of them in the current financial year. Depending on your level of income for the business, you may be able to claim 6 months of depreciation, even though you've only owned the asset a matter of days prior to 30th of June. Also, the last couple of years there have been various incentives that the government has given to encourage businesses to purchase assets prior to 30th of June. Check your taxation advisor as to whether any such incentive exists in the current financial year. 4, prepaying expenses. Every business has smaller items it can purchase just before the end of the year and essentially bring forward the tax deduction into the current financial year. Before the end of the financial year, I tell my admin staff to stock up on all the stationery and ink cartridges, coffee and consumables for the office and purchase them prior to 30th of June. Additionally, depending on the size of your business, you may be able to prepay certain expenses up to 12 months in advance and bring forward the tax deduction into the current year. Talk to your accountant to see if you're eligible to take advantage of this concession. 5, bad debts. If you're a business that is owed money from your customers, review your current list of debtors prior to 30th of June each year and see if there's any businesses that owe your business money that will never be paid. Make sure you write these off prior to 30th of June from your debtors list, so it reflects only the businesses who will actually pay you. 6, stock on hand. If you're a business that has trading stock, review your stock prior to 30th of June and decide if there are items of stock that you'll be unable to sell, or if there's some stock that you'll be able to sell for less than what you paid for it. Remember, you are able to value stock at what you paid for it or its net realisable value, that is what you'll be able to sell it for. Again, make these adjustments prior to 30th of June, as the lower the level of stock, the better it is for your tax position. 7, delay earning income. You may have the option of delaying issuing invoices to your customers just prior to 30th of June. If this is the case, you may be better to delay issuing these invoices until after the 30th of June so the income flows into the next financial year. If you're in doubt as to whether you can legitimately delay issuing invoices, talk to your customers, talk to your taxation advisor about this. 8, use of the company tax rate. If you operate under a company structure, you may have the option of either paying out company profits to the directors or electing to leave those profits in the company and paying the company tax rate of 30 cents in the dollar. This may be quite useful for the next couple of years because the highest rate of tax an individual is 49% until the 30th of June 2017, and it may be appropriate to distribute the profit of the company in the form of a dividend when this high rate of taxes reduces after the 30th of June 2017. You really need to discuss this option with your taxation advisor, as there's many things to consider if you're thinking about using this. Number 9, review your current business structure. No matter what structure you are currently operating under, it pays to review your structure to make sure the current structure is appropriate for your circumstances. For example, you may be a sole trader or operating under a partnership when you should be considering moving to a company or a discretionary trust. In my experience, many businesses are not structured in the best fashion to minimise tax, nor are they structured in order to protect your assets. This is something you should definitely discuss with your taxation advisor or your legal advisor. And 10, negative gearing. Depending on your circumstances, negative gearing is still worth considering as a method to minimise your tax. You may wish to negative gear in the name of a new trust if you are able to get other income into that trust and utilise the negative gearing losses. Again, a great strategy to discuss with your taxation advisor. If you'd like assistance in reviewing your taxation position or structure you are currently operating under, email me at paul@navigatornetwork.com.au. This is Paul Gorrie from the Navigator Network signing off.